Well, we are now joined by Diana Avigdor. Diana, I'd love to get your take in terms of the market movement today. It was pretty volatile. What's your read?
Wow, it was so volatile. This is volatility a second week, really. I really think that we're trading Russian headlines. It's almost minute to minute. We have earnings that are good. We have, earnings reports on balance that are good. Economic data that came out quite good today. And literally every time there is a headline coming out of Russia, the market's trading off. I think that it goes hand in hand with people's fear about whether this market is overvalued. And I think we discussed last week, you and I, about hedge fund deleveraging. I think that some people, some companies might be feeling the money flow or potential cash outflow pain as March and some of April has been pretty difficult for performance. So I think that there is some deleveraging going on every time the market sells off a little bit. So sellers lowers, buyers higher type of thing.
But Diana, it's interesting because I know we talked about this as well. I'm really curious in terms of where you think some of these money managers who decided, call it a month ago, to get out of some of these higher valuation names, the momentum stocks, rotating out of those growth stocks into value. I mean, from your perspective, Diana, like sometimes it can take 6 months if you're a huge money manager to actually exit a position. Do you think that that's in part what we're seeing here?
I haven't heard that it's the actual vanilla managers that are trading here. I think that some leveraged funds have over-levered. Perhaps their beta was a little too high. There is such a thing that you sell your winners. Sometimes you're forced to sell what you can, not what you have to. And I think that at some point, I think that this is going to be a buying opportunity. But then, of course, we have the geopolitical risk right on top of it. So, not quite yet. Also, when everybody is bullish, that's why we call it contrarian, because when everybody's bullish, it means that they've spent all their money and they're all in. So there's no more buying powder. So we'll wait to see a little bit more bearishness, a little bit more skittishness. You're not seeing a real breakdown. You're seeing some pain in the sectoral view, in the sectoral shift. But if you look at indices, and if you look at technicals, and if you look at commodities, and even if you look at the VIX, which is a measure of fear, which granted has been also a little volatile, we haven't seen some major breakdowns. And we've seen the worst volume of 2004 last week. This is at a time when we've had the biggest number of earnings reports, which on balance have been better but have not been able to hold. So a lot of analysis going on. There's been the weather-related issue with the earnings. So I think that people are stepping back, waiting for the geopolitical risk to subside or at least play itself out, doing their fundamental research, because there's lots of it to do in an earnings season, and just wait it out.
But Diana, I'm curious, just to go back on something that you said, that the sentiment right now is bullish, that the majority of money managers are bullish. I'm surprised. I think that there's so much sentiment sitting on the sidelines right now.
Right. So Barron's put out a research report or an article over the weekend, and they were mentioning how sentiment has shifted a bit. And it has shifted a bit, to your point, Catherine. It has come down a little bit from major bullish levels, but only by about 2 to 4%. And so on average, that is not irrelevant, but it's not like it's swung from one extreme to another. I think that there are still people invested. I think that from an investment retail perspective, you've seen Ameritrade numbers a couple of weeks ago. They were phenomenal. The trades all-time high, and all of these stocks that have kind of sold off because of the HFT debate have sort of come back. So the retail investor, the individual investor, both through direct access and through mutual funds, is still quite active and not as fearful as they were 3-4 years ago. So some separation has been made from this retail positivity and some of this deleveraging rotation that's going on. I do think at some point when things settle down, and that's when things settle down, because it's fairly volatile now, even intraday, that we might have an opportunity, even in some of these great tech stocks that have been the momentum stocks and sold off.
Yeah, that have really sold off, and maybe we saw a little bit of buying today because they were down so much, and we did see the market reverse a little bit. So
Absolutely.
Yeah.
I mean, we've seen some great names. I mean, you know, and even the triple Qs, which are the technology ETF, which really an index should not move. I think it did a range of 1% about 3 times today.
Yeah.
Up, down, up, down. So it's been very, very volatile. And we've had some great economic data coming out of the housing
Yes.
sales at 10 o'clock. And we have some important numbers coming out this week. We have FOMC. I think we're going to need to look at the wage growth or lack thereof in the payroll numbers on Friday.
That will be the one to watch. We've got to see the wages increase. Diana, good to have you on the program today. Thank you.
Thanks, Catherine.
That was Diana Avigdor, Vice President and Portfolio Manager and Head of Trading at Barometer Capital. She did join us from the TSX.